Sponsored by Senior Advisory Group.
Hi, I'm Steve Stern, President of Senior Advisory Group, and I would personally like to invite you to take a little bit of your time to increase your income. We come on out to Scottsdale, Arizona, so we can show you how to dramatically increase your income without increasing your efforts.
For more information, visit senioradvisorygroup.com.
While economic factors could affect the relationship between insurance agents and insurers, agents aren't expected to go away anytime soon, according to a new study from Deloitte. A variety of factors are expected to affect insurance carriers going forward, including the need for a heightened focus on price and service among consumers, changes brought about by healthcare reform, enterprise risk management capabilities, shifts in distribution strategies, and the role of technology, the report found. According to Rebecca Amoros, Vice Chairman and U.S. Insurance Sector Leader at Deloitte, quote, "The bad news is that carriers face fundamental, potentially game-changing developments threatening their ability to achieve top and bottom line growth. However, the good news is that insurers also have a number of strategic options and support tools to improve their chances not just to survive, but to prosper," unquote. While insurance agents and brokers will continue to be an important sales outlet for carriers, the relationships could change. Insurers and producers must establish their value proposition for each other, as well as buyers, Deloitte said. The study also said, quote, "Agents and brokers are undoubtedly here to stay. While the demise of the agent has been predicted periodically, they are still the dominant player in middle market and smaller commercial agents, as well as higher-level life insurance and annuity sales, and are likely to remain so for the foreseeable future," unquote. The report also found that producer groups are beginning to utilize the internet. For example, the Independent Insurance Agents and Brokers of America is planning to launch a portal that will direct prospects to agents in their areas selling auto and homeowners insurance. Meanwhile, the Council of Insurance Agents and Brokers is working on an online insurance exchange, allowing producers to see product availability, pricing, and coverage differences from multiple carriers, the report said. Republican members of the House Financial Committee are asking the Securities and Exchange Commission, or SEC, to halt regulation that would institute a universal fiduciary duty of care for retail investment advice. A letter this week to SEC Chairman Mary Shapiro from Republican Representative Scott Garrett, Chairman of the Capital Markets Committee, and 13 other GOP members of the panel said, quote, "It is our view that the Commission has not identified and defined clear problems that would justify a rulemaking and does not have a solid basis upon which to move forward," unquote. Specifically, the Republicans addressed an SEC staff report recommending the establishment of a universal fiduciary standard of care to help safeguard investors who are confused by rules governing investment advisors and broker-dealers. Although the Dodd-Frank Act authorizes the SEC to establish rules on fiduciary duty, the House Republicans wrote that, quote, "A much stronger analytical and empirical foundation than provided by the study is required," unquote, before a rule is written. The letter added that Republicans plan to hold a hearing in the next few weeks and recommended that the SEC conduct a thorough cost-benefit analysis that considers consumer preferences, as well as the greater impact the universal fiduciary duty would have on the financial marketplace. Advisors are not tuned in to where their clients want to invest or what their clients are concerned about, according to a new MFS investment management survey. The survey found while 20% of advisors said they believe investors are more worried about a major decline in the stock market, just 5% of investors voiced that concern. 3/4 of advisors think investors have become much more or somewhat more risk tolerant in the last year, but just 15% of investors said they are more risk tolerant. In addition, 72% of advisors said they think U.S. equities are an excellent or very good place, but only 35% of investors agree. The survey found an even greater disconnect between advisors and investors under age 46. While 84% of advisors said they think Generation X and Y investors' primary goal is to grow assets, just 39% of those generations investors said growing assets is their primary investing goal. The survey, conducted from February 7th to February 15th, included 596 individual investors with $100,000 or more in investable assets and 612 financial advisors licensed for at least 3 years with at least $500,000 or more in annual mutual fund sales. Single parents with children living at home represent the largest group of people without life insurance, according to a Genworth financial study. The study found that only 49% of adults in the U.S. have life insurance, and 69% of single parents with children living at home are uninsured. The study found unmarried men with children living at home are more likely to be uninsured than women. 79% of these men making less than $50,000 a year are uninsured, compared to 66% of women. In addition, 79% of single men with children at home making between $50,000 and $250,000 per year are uninsured. The survey, conducted over a 15-month period by telephone, online, and mail, included more than 23,000 adults. For more on the industry, visit producersweb.com.